from the station that's on your side. This is Channel 7 News Good Morning Arkansas.
If you're thinking about buying a home, you've probably started to do your homework asking friends and family about their mortgage and looking online at all of your options. With so much information out there, it can be confusing and sometimes even contradictory. So here to help debunk some mortgage myths is Bank of Little Rock Mortgage Loan Officer Patrick Dennis. Of course, always great tips from Bank of Little Rock Mortgage. Information everyone needs to know when it comes to buying
how much you need down and a lot of things. So he's going to talk about some of those myths and which ones are true and which ones are not also. Hey, we're going to learn a little bit about mortgages today in the second half. If you're thinking about buying a home, you probably started thinking maybe doing your homework, asking friends and family about their mortgage, looking online at all the options, and it can be really confusing. So today we're going to debunk some of those mortgage myths. It is Bank of Little Rock Mortgage Loan Officer Patrick Dennis, and he's here to tell us what's true and what's not true.
I like that. Great information for anyone out there looking for a home. After this, we're talking mortgage myths. Stay with us.
Well, if you are thinking about buying a home, you probably started to hear a lot of myths about what you have to do or what you can't do. So Patrick Dennis is with us today, Bank of Little Rock Mortgage Loan Officer, and one of my longtime friends. So I'm glad to have you here.
Good to see you.
Welcome. Let's talk about really what's one of the biggest myths you hear that is out there.
I think one of the biggest myths that you hear is that you have to have a 9-to-5 job, that you're working 40+ hours a week.
Right.
That's not true. We have plenty of occupations that just work 25 hours a week. As a matter of fact, there's 26 million people that work only 34 hours a week and still qualify for a mortgage.
Right, there are self-employed people.
Right.
I mean, everybody wants a home at some point, and they don't all have a 9-to-5.
Absolutely.
So that's not required. Okay, also, we always hear you need 20% down. Is that true or false?
Not true, not true. It used to be required years and years ago, but now we do loans as conventional loans with as little as 3% down, and veterans can do a 0% down with no mortgage insurance. We also have rural development loans, USDA, and those are 0% down. You can sometimes pay no closing cost as well. If it appraises, you can roll those costs into the loan.
So don't let that stop you if you don't have a bunch
Absolutely.
of money to put down. Okay, what about paying it off? A lot of people say, I've got to pay off that mortgage quickly.
Yeah, so the general objective, I think, everybody's got a different financial situation, but I think you would want to pay off your higher interest debt, and usually your mortgage is only 4 to 6% in rate. That's the national average, and if you're over 4 1/4, you need to call me and refinance.
There you go.
But your credit card interest rates can be 14, 25, 30%. So I would knock those out before you knock the mortgage out.
Do those first before you go to that mortgage, which may be a much better rate. And,
Right.
and rates are still pretty good.
They're fantastic.
Fantastic. Okay, also, maybe is the lowest interest rate always the best deal for you?
Every situation is different for every buyer. Sometimes you're looking at a long-term home. Sometimes you're looking at a shorter-term home, such as residents where they're only here for 3 to 4 years. They don't want to buy down a rate and spend that money that they're not going to break even with or recoup that cost. So sometimes you go at the lower or the higher rate, still a good rate, and pay less fees so you can save your money.
So sometimes that lower rate comes with some money up front.
Much cost,
Exactly.
yes, depending on the size of the loan.
So you got to kind of look at that, and that's how you guys can really help. And then let's talk about a fixed rate versus what is a changing rate.
An adjustable rate mortgage, which is everybody calls an ARM.
Right.
So not necessarily, again, going back to your situation, if you're in a home for a shorter term time, you might want to look at an adjustable rate mortgage. It could, for example, a 5-year ARM, adjustable rate mortgage. It does not adjust until 5 years, and then it has a cap on what it can adjust, depending on what that product is. So it's worth taking a look at. The one-size-fits-all 30-year mortgage is not for everybody.
Right. Everybody is different, and there's so many different options out there as well when buying a home. And that's why they really need to come to somebody like you or somebody at Bank of Little Rock Mortgage.
Correct. So if you come in, get pre-approved, we're not going to do that one-size-fits-all. We'll look at every option you have. I'm going to listen to what you have to say, what's your long-term financial goals, what kind of assets do you have, where's your credit score, where are you moving?
Yeah.
So, and once we weigh that, we can give you a couple different options for mortgages.
Patrick, thank you so
Great to see you,
much for
Melinda.
telling us the truth and the not so true myths out there. Remember to give them a call at Bank of Little Rock Mortgage. They can certainly help you get into that new home or your next home.